सुन ना, आज मूवी जाएंगे क्या? क्या अभी कौन सा काम चल रहा है? टैक्स ऑडिट का। तुम्हें क्या टैक्स ऑडिट? फ्यूचर्स एंड ऑप्शंस के ऊपर टैक्स ऑडिट लगता है? ओह, hey folks, CA Rachana Ranade here and I welcome you all to a very informative video which is about tax audit applicability in case of F&O transactions. You know, many a times it happens that we do enter into futures and options transactions without knowing certain aspects of the Income Tax Act, and as the deadline comes closer and just in case at the last minute if you come to know about the tax audit deadlines, you might be like OMG. So to avoid the last minute rush, in today's video we are going to focus on the tax audit applicability, the definition of turnover, loads and loads of examples all coming up your way in this very video. Now let's try and understand about the applicability of tax audit. I get a feeling of teaching my CA final students again, right? So as per section 44AB of the Income Tax Act 1961, if you are running a business and if your turnover exceeds 1 crore rupees, then you have to get your books of accounts audited by a chartered accountant. But there is also one exception to that. Now what does this say? It says that if your cash receipts are up to 5% of your total receipts and if your cash payments are up to 5% of your total payments, then the limit of tax audit is increased from 1 crore to 10 crores. So if you are doing F&O business, okay, strictly only F&O business, then ideally the limit for you will be 10 crores. But then in that case, those who are actually doing F&O transactions, you might be like, oh my god, 10 crores is so less, then is tax audit applicable to me? So let's discuss about this in the immediate next section of the video. So now let's understand with the help of proper resources as well as simple examples as to what is the meaning of turnover, right? So if I ask you in normal parlance, what is the meaning of turnover? That's nothing but sales, right? It's so simple. But then how does it work for futures and options? And for that, we have a guidance note on tax audit under section 44AB of Income Tax Act 1961, just a 361 pager guidance note, that's it. And from that you have to only refer to page number 42 of this PDF, okay. What are we referring to? The turnover or gross receipts in respect of transactions in shares, securities and derivatives may be determined in the following manner. Okay, fair enough. A1 is speculative transactions, but I hope everyone by now is aware of the fact that futures and options is not treated as a speculative transaction. So for that we are going to go to part B, and in part B you can see very clearly that B part talks about derivatives, futures and options. That's what we are going to focus on, right? What is very clearly given? The turnover in such type of transactions is to be determined as follows. Very clearly it's given how do we determine the turnover, right? What is given? First point says the total of favorable and unfavorable differences shall be taken as turnover. What do we mean by favorable difference? It means you are in profit. Unfavorable difference, you are in a loss, okay. So this typically would happen in any either future transaction or in a options transaction. Both are possible. And second point, it is mentioned that premium received on sale of options is also to be included in turnover. Of course, there are a few more points here, but right now we are going to focus only on futures. We are going to focus on options. In options, we are also going to talk about if you are a call seller, then what, call buyer, then what, put seller, put buyer, everything. But first, let's focus only on futures transactions, right? So let me take you to a simple example here, right? So first, assume that there is a person, Mr. A, and throughout the year, he has done only 2 transactions. Assume one in Nifty and one in Bank Nifty. Now, assume that while he took the trade, he took, let's say 100 lots, okay? Only one, aaj kuch tufani karte hai, only one single trade, 100 lots, okay. And I'm sure everyone knows 50 is the lot size for Nifty, right. Now what was the buying rate? Buying rate is 15,600. Acha, before I move on, had he bought 100 lots at one shot, or had he traded 10 lots, 10 into 10 transactions, or one lot into 100 transactions? That does not matter. It's not about number of transactions. which we are focusing on right now, okay? Any number of transactions can happen throughout the year, right? Buying rate is how much? 15,600. Selling rate, assume we are saying it is 15,800, right? So ideally this person is in a profit. Okay, so now let's understand what is the total buying amount. Buying amount, how have I calculated that? I've calculated that 15,600, which was the buying rate, multiplied by lot size, multiplied by units, right? So that is the buying amount. Now how do we go ahead with the selling amount? Very simple again, selling amount is the selling rate, multiplied by lots, multiplied by units. Now what will be the profit or loss? Very simple, it will be this minus this, and it is going to come up to 10 lakh rupees, and in absolute terms it is again 10 lakh rupees. What do we mean by absolute terms? You will get to know in the next transaction, okay? So I hope this calculation part is very clear. I am not going to go into so much details into the second example. I am just going to take you quickly through that. So Bank Nifty, everyone knows lot size is 25. Assume that this person again took 100 lots. This was the buying rate, this was the selling rate. So if you look only at this much data, was this person in a profit or was he in a loss in Bank Nifty? Ideally in Bank Nifty, this person was at a loss, right? But now let's calculate the buying amount, then selling amount, then we have a profit or loss figure. And how much is the profit or loss? It's minus 3,75,000. What is the profit or loss in absolute terms? Absolute terms, it's 3,75,000 in simple words. Absolute terms is like the mod value. Mod value means what? We are not going to take the plus or minus sign. It's just the number we have to take up, right? Now, what happened for this person in the entire year? For this person in the entire year, his turnover for a layman will be this sell amount plus this sell amount. A person may feel, oh my god, it's 11,80,000. It is greater than 10 lakh. So maybe, 11 crore 80 lakhs and this is greater than 10 crore. Oh my god, isko to tax audit it's applicable, but that's not the case. In case of futures, you have to take the mod value of profit and loss, and this comes up to 13,75,000. This is nowhere even close to 10 crores, and that is why for this person, tax audit will not be applicable. But still, one last minute I want your attention. Why did I add this up? Now let us go back to the guidance note. Guidance note says the total of favorable and unfavorable differences. Differences is the difference between buying and selling price. Favorable and unfavorable. So profit bhi add kiya, loss bhi add kiya in the mod value, and this is what is going to be taken for the turnover amount. I hope this entire example is absolutely clear. Whoosh! I hope you understood all about the turnover calculations using the positive trades, negative trades and whatnot. But that takes care only of the calculation part. What about filing your income tax return? Well, now you can file your income tax returns with the help of TaxBuddy. TaxBuddy.com has access to some amazing tax experts from across India. I checked out on Google and got to see more than 4,000 user reviews with 4.9 star rating. Moreover, you get seamless experience with accurate filing due to the use of technology. Well, after filing ITR, there is a free assistance in case of post-filing notice and free tax planning for the current year. My viewers can get special 35% discount for expert-assisted ITR filing. So do check out the taxbuddy.com link in the description below. So now let's move on with the example of options, and for that I am taking you back to the guidance note. Here you can see that the turnover in such type of transactions is to be determined as follows, right? Two things to be considered. The very first one is the total of favorable and unfavorable differences shall be taken as turnover. We have understood the interpretation of this point in the example of futures. What else is to be done for options is that premium received on sale of options is also to be included in turnover. So this point plus this point together is going to be treated as the turnover. So for better understanding, let's take an example, and to begin with, we'll take an example of a call seller. So assume you're a call seller and you have sold call option of 15,000 strike price. Of course, I'm sure if you have done transactions in futures and options, everyone knows that if you're a call seller, you must have received premium for that, and premium is 300 rupees, right? So now let's understand based on a case study what happens on expiry date. Assume that on expiry date it closes at 16,000, market closes at 16,000. So this went against your trade and this went in the favor of call buyer. So is the call buyer going to execute that? Answer is yes, and you will have to face a gross loss of 1,000 rupees, right? But then what would be the net loss? See, gross loss was 1,000, you received a premium of 300, so your net loss will be only 700 rupees. But then again comes the absolute figure. So absolute figure is basically the mod value. What do we mean by mod value? We have to remove the plus or minus sign, whatever. So absolute loss will be, absolute loss in this case will be only 700 rupees, right? But that's an absolute figure. What will be the turnover? Now again, for that, let's go back to the guidance note. Total of favorable and unfavorable, and what else is to be included? Premium received will also be included. So this 700 plus premium received, in total, the total turnover will be 1000 rupees. Okay. So I hope you have understood this part for call option sold in the case 1. Let's go to case 2. You had sold another 15,000 strike price and you collected 300 rupees premium. Assume that market went in your favor, but of course against the favor of call buyer. So is the call buyer going to execute the contract? Answer is no. So no gross profit. What about the net profit? Net profit is nothing but 300 rupees, whatever premium you have received. Absolute profit or loss again will be 300. But what will be the turnover? Absolute profit or loss plus what? Plus premium received. So the turnover will be rupees 600, right? I know this is a little bit hard to digest. Some people might also feel, hey man, this is super illogical. But that is the reason why I'm showing you the guidance note. Based on that, I've done the interpretation, also had a word with few chartered accountants who are practicing in this field. I have confirmed this from them as well, and that is how I'm putting these examples in front of you, right? Now let's go to the third case wherein we are talking about put option seller. So what happens in case of put option seller? Assume strike price was 16,000 and assume that the premium received was 350. Now what happens on expiry date? On expiry date, the market goes to 16,700. So has it gone in the favor of the put seller? Answer is yes, but of course against the direction of the put buyer, and that is why gross profit or loss is going to be 0. In this case, net profit or loss is again going to be 350, same premium received. What is going to be the absolute profit or loss? Same 350. And what will be the turnover? Absolute profit or loss plus the premium received. So 350 plus 350, that's going to come up to 700. Let's go to the last one. Same, you had taken a strike price of 16,000, premium received 350. Now market goes to 14,000. Okay, now is this in the favor of a put buyer? Yes. Is that person going to execute the contract? Yes. How much loss will you have to face? That loss will be 2,000 rupees. Right. Now what is going to be the net loss? You faced a loss of 2,000, but you have also collected premium of 350. So the net loss will be 1,650. Absolute, so basically remove the minus sign, is going to be 1,650. Again, you are going to add 2,000 rupees. What is 2,000 rupees? The premium received, right? And that, you're going to add up the amount of premium received, which is going to be 350 rupees. So your total is going to be 350 plus 1650, and that comes to 2,000 rupees. I hope you have understood this entire example of a call seller with multiple cases, and in the next section we are immediately going to talk about a call buyer and a put buyer. Now let's go to the profile of a buyer now. Either you are a call buyer or a put buyer. So let's take examples again, different examples, so that you get an idea about how the turnover will be calculated in each of the scenarios, right? So assume that you had bought a call option with a strike price of 15,000. How much is the premium paid? Assume 300, right? So now let's understand what happens on expiry. Assume on expiry, the market goes to 16,000. Has it gone in your favor? Yes. Are you going to execute the contract? Yes. What will be the gross profit in this case? It will be 1,000 rupees. For those who have done futures and options or futures and options practically, what will happen in this case is basically when the call seller, when the call buyer is going to square off the position. First he has bought, ultimately he is going to sell. While he bought the call, he had paid the premium, and when he is going to square off, that is whenever he is going to sell the call option, that's when he is going to receive the premium. So basically this 1,000 rupees, you can either call it as a gross profit, or either you can call it as gross profit, or you can also call it as a premium on sale of option. Okay, so this is again something which is very crucial. If you want, you can just rewind and replay this part of the video. How much was the premium paid? As I mentioned, it was 300. So now how much is the net profit or loss? It is only rupees 700. Absolute profit or loss, again 700. Now I want a correct answer. How will the turnover be calculated? The absolute profit or loss plus what? Premium received. So it's going to be 700 plus 1,000, and in this case it's going to be 1,700 rupees. I know this is a little bit tricky. You will have to again, revise this so that you get a proper understanding. Again, for this, base is absolutely the same. We are just taking a total of point number 1 and 2 in the guidance note, right? Going ahead with the next one, call option you bought at 15,000, assume you paid a premium of 300. What happened on expiry? Market went against your direction, it went down to 14,500. Are you going to execute the contract? Answer is obviously no. So here you will see a dash. Now how much will be the net profit or loss? Nothing, whatever premium you have paid, that is 300 rupees. So what will be the absolute profit or loss? That will be nothing but 300. Now tell me, this absolute profit or loss plus premium on sale of option, will that ever happen? Arey no, you are not going to execute the contract. And that is the reason why you didn't receive any sale, you didn't receive any premium on sale or on square off of the option, and that is the reason why turnover will again be only 300 rupees, right? Let's move on to the put option which is bought. Assume that you bought a put at 16,000 rupees, okay? How much is the premium paid? It's 350. Now what happened to the market? Market went against your direction, it went up to 16,700. Are you going to execute the trade? Again, answer is no, you are not going to execute that. So how much is the net profit or loss? Only whatever is the premium paid minus 350. Absolute, so remove the minus figure, minus sign. The absolute profit or loss is going to be 350. Now, this absolute profit or loss plus premium received. But have you received any premium on sale of option? No. Why? You didn't execute the contract. You didn't, because it went against your direction, and that is the reason why it is going to be only 350 rupees. Now comes the grand finale. Assume you had bought a put option at 16,000 and you had paid the premium of 350. The trade goes in your favor and the market goes down to 14,000. So what is the gross profit? It's going to be nothing but the difference between these two, or rupees 2,000, and this 2,000 is nothing but whenever you're going to square off this position, you are going to receive this as a premium of rupees 2,000, right? In this case, what will be your net profit or loss? It will be 2,000 minus 350, which is the premium paid, and that's why it's going to be 1,650. What will be the absolute profit or loss? Same, 1,650, and here comes the trick part. Now, what is turnover? Turnover is nothing but absolute profit or loss plus premium received on sale of option. So it's going to come up as 1650 plus 2,000. So this is going to come up to 3,650. I know many people might feel that, array, this is, you're taking this double and this, that. But believe it or not, this is proper. If you look into these points very carefully in the guidance note, you will understand that the interpretation is absolutely correct. Now comes the final part. Assume that there is one single person who did all these 8 trades. So now how do we calculate the ultimate turnover for this specific assessee? We are going to take the total of all these trades, and the total of all these trades comes up to 6,000 rupees. Now if I go to the sell side, here you can see that the turnover will come to 4,300 rupees, right? So what will be the total turnover for this assessee? It will be 4,300 plus this 6,000, which comes to just 10,300 rupees, and obviously this is like way too lower as compared to the 10 crore limit, and in this case for this assessee, tax audit for this specific year will not be applicable, assuming that this is the only business that this person has. Well, I hope those who had never done CA also got a feeling of sitting in a CA class, and you got to know some amazing but a little bit complex calculations about turnover of futures as well as options. But now that you know about this, next 1 or 2 small points is that what is the slab rate at which F&O will be taxed? It will be taxed at the applicable slab rates for the assessee, right? Next question is about what ITR will have to be filed for such assessees. So there are 2 cases again here. If you are going ahead with presumptive taxation, then you will have to file ITR 4. But if you don't opt for presumptive taxation, you will have to go ahead with ITR 3. But right now we just heard one new word here. Which was that? Presumptive. So now what is this presumptive scheme? What is this presumptive taxation? If I start this right now, it will take another 10 to 15 minutes. If you want to learn about that, you can please let me know in the comment section, and I'll be more than happy to do a separate video on that. If you have loved this video, don't forget to share it with your friends, families, everyone. Let this go viral because this is super duper important. If you want to know more about how you can save taxes on stock market gains, you can click here. And if you want to know if government can charge 50% tax, you can click here. Till then, take care. Jai Hind and bye-bye.